The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, you can always catch me at the mainstreetcode.com, or if you're traveling and you have Apple or Spotify, you can catch my episodes there, or you can always stream the site 103.9 LI News Radio, 103.9. They live stream these events, and you can always catch some past episodes there as well. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States with their needs with annuities, life insurance, disability, long-term care, and life settlements. And we help you, the client, in helping you make valid decisions and everything else. And if you don't have a financial team, we'll help put one together. Today, we're very fortunate to have with us my guest, Tom Granata. Tom, say hello.
Hello, Neil. Thank you for having me.
No, thank you for being here. Tom is a great relationship and partner in doing business, and he is a wholesaler for American National and an expert in annuities. And we've worked together, 20-plus years, Tom?
I was trying to remember how long it's been, Neil, and it's 25 years.
Wow.
At least.
And you know, having relationships with carriers and things is so important. You know, when you buy a product, when you buy any financial product, whether it's life insurance, annuities, any of the products I sell, and you know that I have a relationship with you and I have a relationship with the carrier, it's so important when you need service. In annuities, you need to take a withdrawal, you have an emergency, you want to surrender it, you want to, you know, where I'm needed most is, hey, your parent has passed. What happens to that annuity? Where does it go? Tom, you know, would you talk a little bit about the service end and the importance of the relationships and why it all works?
Yeah, it's such an important point, Neil, and thanks for bringing that up. And it's important to know, folks, that Neil has a lot of choices of carriers, and we wouldn't even be talking if we didn't pass muster. We didn't check all the boxes that make sense for his agents and clients. Doing the right thing every day. A matter of fact, American National, the company I work for, is on the Forbes list of best insurance companies for 2024, 2025. And I only bring that up because that's something that we work hard at. We don't take it lightly, and we try to live up to that every day. And that means things like service. That means things like doing the right thing as best as we can every day. And we know no carrier, no company is perfect, but we try to live up to those high standards. So service is critical. And if I'm an agent and I have a relationship at a carrier, there's a point of contact, which I happen to be for Neil and his team. That's so important to weave your way through the maze of really any company, much less an insurance company during those most critical times when you really need to help a client who a relative just passed away, or they need a withdrawal on an important financial stimulus they need. So all in all, having that relationship, knowing who to call and where to go to get that service that everyone deserves. That's so important.
Yeah, and I can't stress that enough. You know, a lot of people today think they can Google anything. They can buy term insurance online. They can buy an annuity from a bank that they don't even know, or the person they don't know, and then come back and say, well, I didn't know it did this, or I didn't. You know, I have a recent situation where there's a bunch of annuities. They have these market value adjustments, a very complicated mechanical tool where they think they're getting a certain amount when they're surrendering, but because the interest rates are so high right now, they're getting a much lesser amount. It's very, very, you know, there's a lot of little intricacies. And this is why I wanted you today, because last week we talk about annuities a lot, and last week I spent the show about annuities, and today it's so imperative, and the annuity companies are so busy because of the market volatility going on today. Fixed annuities are a great option, whether for your IRA, your Roth IRA, your retirement, or your money, what we call non-qualified, that's not involved in any type of IRA or Roth IRA. You can buy an annuity in all these things, right?
Yeah, I mean, before you even get to buying an annuity, I think it's important just to reach out to an agent. You know, and Neil can help you with that, and many others, because what we've learned is people need to save more for retirement.
Right.
People, things change in their lives every day. They're retiring. They have market volatility. They're at the point where their risk tolerance level has changed, and they want to do something about it. So, talking to an agent, I was looking at the Fidelity Investments, just to give you an idea of the average account balance. There was a median account balance, the average account balance, and both were shockingly low numbers, 29,000, 82,000, respectively. So, long story short, people aren't saving enough for retirement. They need to talk to more agents about these critical topics, and annuities are just one part of the equation.
Of course.
And yes, American National, you know, we're a big player in the annuity space, and we're fortunate enough to work with folks like Neil and his team. But yeah, I think, you know, we're at those stages where you let's say you are retiring, or you got terminated, or you voluntarily leave a company. You may have a 401k there, and you typically don't want your old employer to be making money on your 401k because there's fees they pull out every month. So why not roll it over to a guaranteed fixed deferred annuity?
Well, I mean, that's a good point. With all the federal job cuts and things going on right now, with Social Security and federal agencies and education department and all the noise we're hearing in the news, you know, there's a lot of job uncertainty right now. And the last thing you need is to have job uncertainty or be terminated and be in a situation where now I got to rely on my retirement money. But guess what? My retirement money just took a 15% hit, a 10% hit, right, because of the market, like the worst time. So we see people fleeing to us right now and buying fixed income products, including Warren Buffett, the big money, is pulling out of the market and buying fixed instruments. And I think that one of the best fixed instruments is an annuity. And
you know, I'm sorry, Neil, finish up.
No, I'm saying one of the best fixed instruments is annuity. Last week we talked about CDs, which I call, certificates of depreciation, because you have to pay tax on the interest every year, and you really can't get ahead with CDs. But fixed annuities, you don't have to pay the tax until you use the money, or you can create an income stream that can last a lifetime, which no other product can really provide for you.
You know, agents do this every day, you know, and sometimes clients are concerned about, will this cause a taxable event? I'm worried about this large amount of money moving from point A to point B. You know, agents and advisors handle these type of annuity transactions, let's call them, every day. And at American National and companies like us, you know, our focus is about guarantees and offering annuities, a variety of annuities. We don't offer the variable kind,
right,
which offer negative returns potentially. With us, it's about upside potential and downside protection on an index annuity. Then we have the traditional fixed annuities where it's guaranteed interest rates, and of course immediate annuities with lifetime income. So it's a mix, and agents can help clients walk through that process.
Fantastic. And we're coming to a break, and before the after the break, we're going to go in a little bit more depth about index annuities, because it's a little bit different. Even though they're fixed and you can't lose any money, there's a lot of little mechanisms there that I never really get on the weeds with, and that's why I'm really happy to have Tom Granata with us. If you want to get a hold of me, the best way to reach me is Neil Himmelstein, 631-647-4694. If you want to catch a review of this program, if you happen to miss us, themainstreetcode.com or last week's, and go over all this material, and we really appreciate you. And Tom, I'm not sure if we can just do a little commercial for American National. They have a website, American National. Tell me what their website is.
Yeah, www.americannational.com.
Fantastic. And we'll be right back after the break. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Today we are with Tom Granata, who's a wholesaler for American National. Tom has been a relationship of mine for 20 plus years, maybe 25 years, with various companies, and I've always relied on his expertise and plan design. And people buy life insurance online and they think everything is the same. Oh, it's term life, it's this, it's that. But there's differences in every contract, including annuities. People want to buy rate, but it's more to it than rate. So before the break, we talked about service. Service of insurance company is rarely talked about with a client. They just want to know what's the best rate, and then you go to the bank or you go somewhere online and you say, oh, that's the best rate, and you buy it. But service is so important. Details of the contract. What is this contract going to do for me, and how is it going to affect me long term if I need to take a withdrawal? So a lot of annuities might have a withdrawal privilege that we don't talk a lot about. Typically, like it's a 10% withdrawal without a surrender charge. Tom, let's just briefly talk about some of the different surrender periods. People don't understand, okay, it has a surrender period. What does that mean?
Yeah, great question. It's important to know that annuities typically have what's referred to as a surrender charge period. Some of the trade-offs and benefits you get in an annuity are vast, but to pay for that, there needs to be some sort of mechanism to keep the funds there to help offset those costs, and that's a surrender charge schedule. Typically, as little as 3 years, 5 years, 7 years is most typical, out to 10 years.
Right, and there's no fee to get in annuity. It's no cost for you to take $1 from whatever account, whether it's an IRA or you're starting a new Roth IRA or you're rolling over your money, or it's just cash that you have laying around. There's no cost to get in annuity. There's no charges, but they will charge you if you say, next week I want all my money back, or not next week,
correct,
in 6 months.
Now, we typically give the client at least 10% immediately available if they need it.
Right.
And if they need that right away, hopefully they'll plan for it and put that aside.
Right, but that's not all contracts. A lot of companies will wait a whole year before you can take out that 10%. So that's one of the differences right there between, let's say, using your firm and another one that may have the same rate. I just wanted to show that there are differences. That's a big difference.
And clients, even within the annuity space, maybe their risk tolerance may be comfortable with an index annuity where you have the potential to earn a little more interest versus a traditional multi-year guaranteed annuity or a traditional fixed interest.
Right. I love index annuities, by the way. Absolutely love them. Let's go a little bit more about index, because I've talked about it a lot, but maybe hearing it from you, they'll get a different perspective and maybe get a little more in the weeds. Basically, the way I explain an index, and I didn't mean to talk over you just for a second.
No, go ahead.
Basically, what happens is you participate in the market by tracking an index, even though you're not in the market, your money's not in the market, it's a fixed thing, you're tracking an index. You can never go below zero, you can never lose money, but you have some good years in the market and you can gain money, and it's only hedged on the top end.
Yeah, I think that's pretty much it. The trade-off is for a little more, for protection on the downside, you get a little more potential participation in the market upside. And when I say market, we're tracking a popular, well-known index, and typically the S&P 500 index. So if the S&P 500 goes up, you participate in all of it, 100% participation up to a cap, say
right.
10% cap.
Right.
And then if the market is negative, and we're talking about annual interest crediting, we're annual decisions. What did it do over the last year? Was it up? Was the S&P up 12%? We'll credit you up to the cap, 10% in that example. If the market is negative 10%, we'll credit you 0. And in some states like New York, it's even like a 1% floor. So
right. A floor meaning that you're guaranteed at least to get 1%. On many annuities in the state of New York, it's higher than elsewhere, and maybe the cap might be a little lower in New York than it is elsewhere. We have listeners all over the country, but predominantly New York. Again, that's the spread. So as you're concerned about market volatility, and or if you're retired and you're at that point where you can't afford to lose money, this is a great option where you can still get that kind of growth that you need for your longevity, the longevity risk you have, and you have that downside protection of, hey, we might have a bad year. And
that's why annuities are so popular. It allows clients for no fee to get in. We're talking as little as $5,000 or $10,000 to open one of these annuity contracts.
Right.
With many carriers, not just American National. And no fee, and allows you to even diversify within the index annuity. We have a fixed account and index strategies you can diversify in there. So this is where an agent would probably be best to coordinate these conversations with.
Well, there's another account that's been becoming very popular, and I know you're doing it outside New York more than here, and accounts are in New York. They call it a trigger account, and agents don't even understand what that is. I do, of course. You do. Can you explain how a trigger works? If you're
the way I love to explain it is there's only two possible outcomes in these. We call it performance trigger strategies. Basically, at the end of 1 year, if let's say the S&P 500 index we're tracking is not negative, we'll credit you at a set interest rate. Let's say 8%, and if it is negative, it'll be 0. So it's either 0 or 8% crediting at the end of the year.
Right.
And so that's essentially how the trigger strategies work.
Now, what's interesting is, depending on your time horizon, okay, we can go back historically and look back, and, it's 7 out of 10 years are positive, and 2 to 3 years out of any 10-year period are negative. Out of any 10-year period you pick over the life of the market, that's what we found. And even if you're in a market like today, which is extremely turbulent, we have had a really down year because of all the tariffs and this and that and turbulence. Mm-hmm. And even if it was down this year and you bought one today, usually after a down year, we have our best years, up years. So it's a very interesting cyclically when you manage it over time. However, if your time horizon's 5 years, maybe I just want a fixed rate for 5 years. So everybody's different for what their needs are, and every client, every person, everybody I deal with has different needs and ideas and strategies and what they want to use. And again, annuity is one part of the strategy that's so popular, and in my mind, one of the best secrets out there of really guaranteeing your money. I mean, we have, banks are doing CDs all over the place. CDs, you get taxed every year. I mean,
yeah, Neil, I'm biased. I believe everyone should have an annuity. It's just a matter of how much and what kind, or what combination.
Right, exactly. So I'm not saying it's bad. There's a lot of reasons to do a lot of different things, but you need to speak to someone like myself or a really quality agent who understands what your risk is, what your time horizon is, and really what your vulnerabilities are, because at the end of the day, it changes. While I was working, I had a client, he was an engineer for Pratt Whitney, and this guy had a 401k, he had a pension, and man, the market was booming back in the 80s, and I mean, it was going crazy. So he thought, oh, I'm getting 20% a year. I'm living the life, man. I love the market, this and that. When he retired and he didn't have income anymore, wait a minute. I don't want to risk all I've gained. Let me scale it back and take a more conservative approach. So that's where we are. That's where the need is. So
it reminds me of my mother-in-law. Basically, I was younger and I owned an index annuity myself, but for her, she was at the stage of her life where she was just looking for monthly guaranteed income.
Yep.
And the company I worked for at the time, we offered the immediate annuity, and it just put a smile on her face. It wasn't a lot of money, but it showed up every month.
My dad had one of those too. Absolutely.
The immediate annuity. So index annuities, traditional fixed deferred, or the immediates, depending what phase of life you're in, there's an annuity option for everyone.
Fantastic. And you've been listening to the Main Street Code for Financial Success. If you need to get a hold of me, 631-647-4694. And if you want to know more about American National, go to americannational.com and